Good evening, everybody. What a great day, and good to have you here for the executive summary for stock setups for tomorrow, which is, of course, Wednesday. Let's have a quick look at the S&P. So we perfect. This is exactly what I wanted to happen today. So I'm super happy so far with what the S&P 500 has done. We certainly broke open range to the downside by about 9 points, closing below the open range. So that is a big success in itself. Very, very happy about that. This means that the bias to the market is now negative. Very light volume though. Only basically very similar to what it was yesterday. My volume isn't reporting properly on the S&P index, but it was very similar to yesterday. It was thin volume, so not a powerful drive down, but a break nonetheless, showing us that the bias is negative for the time being. Having a look overseas, we can see that the S&P futures are currently down 14 points. And if we look at the overseas markets, the Nikkei negative 2.9, the Hang Seng negative 1.9. Gold is continuing to rally up another point there. Whoop, there we go. Back and forth. Crude oil dropping. All these are perfect, seeing as I'm long gold, holding calls in the triple bear ETF, SCO, on oil. And of course, we are short the market. So everything looking pretty much damn perfect right now. So hoorah! Some of the stocks that obviously performed really well. We mentioned this in the executive summary last night. DLPH just looking so good. I already hold puts in this, but that dropped 5.39% today. MUX, which is the long that I'm holding in the gold calls in MUX, November $4 calls. This just continues to skyrocket. This looks awesome. Up 7% today, over 7% on Friday, over 1.85 the day before. So just this just keeps gathering momentum. That's looking awesome. So really, across the market, I'm super happy with how we are positioned. So going into tomorrow's market, I'm giving some. I've got some longs and some shorts to give an equal hedge, which is not biased to market direction. But obviously, if we have a big tank in the market tomorrow, we're going to be. I wanted to see how that kind of market opens up. But I always believe in hedging, even in a bad market. The one strategy that I use, Fallen Angels, is my absolute favorite. It's the only strategy I trade long in a bear market because it still works. So these hedges are selected carefully to have the highest probability of success, even if the market drops. So let's start with the shorts, though. We got MDCO, Mike Delta Charlie Oxford, or October. As you can see, this one never really got any kind of a rally from what we saw in the market action last week. In fact, what it looks more like is that we've actually had a pennant, possibly even a flag or bear flag form in MDCO. So drawing on those trend lines there, we can take off some of these moving averages, just clean the noise up a little bit for the time being, because this is not a momentum stock, so we don't need momentum indicators being moving averages. So therefore, we can measure the distance of that pennant. You can see there we go. Measure that beneath, and you can see we look like we have a drop on MDCO down towards that $30 mark. So perfect. That could be about a 10% drop. So I'd look for this to break below the trend line so we can get confirmation. Beautiful divergence in the money flow. I'd look at a break below 33.23 as an entry criteria, a target of $30.33, and a stop at $34.37, which is just on the other side of where that pennant would be, kind of going into tomorrow, or even just I'd go even just a little bit higher. So I'd look at 34.47. The high of that candle was 34.50. So yes, we'll be just above that in tomorrow. All right, so there's the MDCO. Let's go to VDSI. VDSI, beautiful. I shorted this today, as you can see, just like the previous stock. So as I mentioned about longs, I'm looking for longs that didn't drop when the S&P dropped, so I can find resilience there. Same thing with the shorts I'm looking for. I'm looking for shorts that really didn't rally. The S&P rallied hard last week, so we kind of get resilience there. Look at VDSI, dropped, just rallied into resistance, didn't break through, and just came crumbling down today. So I'm already short this. I got in around 1570. My stop criteria is at 1583. If that does stop out, I'll look to re-enter in around 1673 and throw a stop loss just above 17. So that if it fails, I'll re-enter. But at the moment, stop loss is at 1583. My target on either one of those trades is 1417. Okay. So there's the next one. ZBRA is the third and final potential short for tomorrow. Again, looking back at the history on this chart, we're dealing with a potentially kind of really long-term head and shoulder pattern, really long-term. So I mean, there's kind of the scenario we're looking at, and when you can't really judge it based on the daily chart. You have to really go to a logarithmic chart to get a feeling for where that head and shoulders would be. And even then, let's go to a weekly so we can get a better idea of the scale. And let's just zoom in to, whoops, there we go. So let's just go through and have a look at the, there's the head and shoulder. We can just measure from the, oops, there we mean. We can measure from, we'll do it here. Okay, from the neck, the bottom of the head to the neckline. Let's look at the duplication of that. You can see that brings us down to around about this $24 mark. And if we look at $24, that was the point where we kind of rallied off back in 2010. So major support there, high frequency support there with a sharp reversal candle, and so this would be a potential play on ZBRA. I'd look at a stop criteria at 51.33, an entry at current prices, and I look at a target of $25.13, and for the puts, an optionable play, I'd look at the August $50 puts. Okie dokie. So there's Zebra. Now onto the longs. We've got a couple here for hedges. SGY. See what this opens at in the morning. The major support on SGY. This stock has got a real momentum type feel to it. Heavy short float, 40% shorted, which means a lot of people betting against it, but it also means big potential for short covering rallies if this squeezes and just keeps going. We've just overcome the 100-day moving average, and so this one has some horizontal resistance kind of right in around there. So we're looking around the $30 mark. And if we look at the next resistance level, we can see that's at the $20 mark. We're currently at 12.02. Okay, so key support we're going to see is going to come in at the 9-day at 10.31. We're going to see it's also going to come in at the 5-day at 11.41. So I'd be looking at a pullback to around that 11.50, 11.55, basically wherever that 5-day moving average is. See if we get a pullback to that level. But keep an eye out. The main support here is going to be kind of around $11. So I'd be having to have a stop loss at around 10.90. Well, what do I say here? Yeah, 10.93, a target of 19.13, but I'd be entering at a pullback either to the 5 or 20-day moving average. You just have to look at that where that's in the morning, but I guess that's going to be somewhere around, basically the $11.50 mark. But yeah, that's got that could break right up to that moving average there, and that could be a quick potential play. Again, these are high risk because they are lowest price. So always consider how much you're going to risk. So like if I had let's say I was going to put 10 grand into a stock where I was risking 3%, then I'd put 3 grand into a stock that I'm risking 10%. So it's just to give you an idea of figures. I don't want to ever be risking more than a certain dollar amount. So I mean, just always consider your cash management so that you're dealing with this appropriately. Because also remember that if this stock has an opportunity of going up $6 or 50%, you're also going to make a lot more with 3 grand than say that goes up 50%, than say a $10,000 position that only goes up 10. Or it's going to be similar anyway. So you can see the kind of how the math would work there. So equal risk, equal position sizing in terms of a risk quantity is what I'm really looking for in these types of trades. ADMP, now these are I'm kind of really excited about these longs because they meet the rules so well even in a bear market. Look at this stock. This stock's got no idea what the market's doing. It's not dropping, it's not rallying, it's moving like a beautiful fallen angel, and you can see just popping through that moving average now. Now, so this would be one that I would look at the hourly chart on. You can see kind of why in a second. Okay, it's just squeezing right underneath this kind of moving average and a flat top. So I would wait for this to break through. I would wait for this to break through 324. I'd have a stop loss at 297. And this could be a really big run. So this could get all the way back up to about $5 potentially. But the way I would manage this is just keep moving the stop loss up behind it as the stock continues to make new support. But it's got that kind of gap fill that it wants to kind of pull back to up, as you can see it up here around $4.86. So in terms of the first target though, we're going to have a slight struggle here, probably with around the 370 mark. But by that time, we're going to be able to update the stop loss to protect the position. So that's kind of how I would manage that, is just keep pushing that up as we hopefully go along. Now, if you want to play the kind of higher risks, get some longer term puts and calls and put them in your pocket, I would look at the December $2.50 calls, which are currently $1. FCSC. This is kind of, again, a very speculative, but again, potentially explosive play, biopharmaceutical, and this is a stock that's had, again, no real drop in the market's volatility. It's just been building this beautiful base. Massive volumes come into it. They're about to do capital raising, so we're going to expect that to come into the stock and probably create some buying, obviously here. We've got a lovely little formation where we pull back to support and created a lovely base here. It was up 10% yesterday on 422,000 Friday, and only down 2.36% today on half that volume, 280,000. So this could be exciting. I want this to break through $1.33 as an entry criteria, and I'd put a tight stop on that of about $1.25. My first target would be 147, but if they achieve what they're trying to achieve with some of their drugs and so forth that they're looking to go into, or looking to get finished to be successful, and you can read up on that, but this looks like a potential rally at least up to 250 in a technical standpoint. This could really have a life of its own. I was looking at some speculative, like in case this blows up, just taking a couple $100 worth, for example, of some of the November $2.50 calls, which are currently 15 cents, and so yeah, I'd be looking at, but in the short term, as a purely a trade, 133 entry criteria, a 124 stop criteria, and $1.47 target. But as it shoots up, I take some profit, and then I would leave some riding with a stop loss behind, again as a hedge in this market. And lastly, RH. Restoration Hardware Holdings. Again, lots of resilience in this. Really simple. Just looking for a quick trade in and out to fill the gap. I'd be looking at this as an entry at 30.24, so it breaks a new high. I'd be looking at a target of 34.83, and a stop loss at 28.13. Real simple on that one. And there you have it. So lots of cool stuff. And again, if you're not sure which one to take, I mean, this is something where I'm planning to kind of put trades in on all of those four, but I'm only going to be putting about a third of the capital I would normally put into one position. So basically, I'm using the same amount of capital, but I end up with four positions instead of, well, just a bit more than the same amount of capital. But I end up with four positions where I've diversified amongst my hedges instead of taking one long and trying to choose between them. So some may not trigger, none of them may trigger, some may fail, all of them may fail. But if the market absolutely tanks tomorrow, then a lot of these stocks won't break higher and won't trigger. And if they do, then they're moving against the market and they could still profit. So that's the beauty of kind of trading in this fashion. The only one we're looking for a pullback on is SGY. So that's the most likely to fail if the market really collapses. But again, it's got that strong potential. And of course, if the market does collapse, we'll be making so much damn money on the puts we've got that it really wouldn't matter if these failed anyway. So, but the purpose of these is to have a hedge, and these are the ones that I like the most. So with that, I'll leave you with, of course, a reminder about the big one class tomorrow. Again, this is tomorrow. This is going to be superb stuff. This market conditions couldn't get any better. So here's the information on how to get involved and what's entailed, and I hope to see you there. So this is your last chance to kind of get involved. Again, the big one is a very specialist workshop that we do when we see a perfect storm of market events leading up to a potential big drop. The last couple times we have done it was back in July of last year, where we had a 10% correction. We did it again in December last year, where we had a 10% correction. In both of those events, we selected our favorite long-dated options for companies that are extremely weak from a number of factors, which I'll talk about in a moment. And again, across those selections, we had very few losers. Most of them were 200%, 300%, 400%, some as much as 1,000% returns over a 3 to 6 week period. So this is really kind of a very special event. What we covered on Wednesday, which is the lesson you will get right away on demand that you want to watch as soon as possible. We covered that just last week. That lesson we went into teaching you the how we designed the big one scan, which is something we give you, and that scan incorporates a very top-down approach of looking at the weakest sector and then the weakest industry within that sector. So where are those areas? We then go in and fine-tune from the stocks that are in the weakest sector and weakest industries in the entire market. We show you how we pick those, but then we go into those individual stocks and look at the ones that have the heaviest insider selling. We then actually go into the insider sellers themselves, look at their track record, look at how much they're selling, what their success record is in the past has been, whether they are big swinging wigs, where they have made huge moves before, when they got out of stocks and they were bang on the mark. Those are things we want to be aware of. We look into the company themselves, the institutions, if they're all selling them as well, P/E ratios, dividend yields. Like, we go into everything, of course, and then combine the Acorn technicals on top of that to look for the highest probability short setups where we can get some really juicy priced options where there's that high triple digit potential return based on the weakness of that stock. So that's what we did on Wednesday, and that's what you'll get straight away on demand, is that lesson showing you the scan. And of course, after going through the scan, we actually in fact went through and applied the scan live and actually picked out some extremely attractive positions that some of which we've already started to take positions in. But most of that has just been preparation for the live lesson this Wednesday at 6:30 Mountain, 5:30 Pacific. 8:30 Eastern, that's the time this Wednesday that the next live lesson will take place, and that's where we're going to be putting the scan into action and picking out our top favorite core positions we're going to be getting into and holding. And so again, this class really focuses on the options where we can get those really humongous potential returns if these stocks do drop 30, 40, 50%. The upside potential on the options is limitless. So we talk about what options we're looking at, why these are our absolute top alerts versus the other ones we've found in the scan, where we provide you with the big one Excel sheet to track everything that we're considering in that decision-making process, from all the time frames to the risk reward to the insiders to the special conditions, everything. Risk reward calculator, and of course we'll be going through in Wednesday's session all of the fundamentals and technicals that we've used to screen these and why these are our favorites. And we'll also be providing you with, on top of the big one, a brand new short scanner we've developed for incredible charts, which is just extremely powerful and is our newest addition to our scanning arsenal. So it's only $197. We will probably make 10 times that just in the stocks we found already in today and tomorrow's trading, based on how the charts on those stocks are looking. So I highly recommend you give it a look. If you've got any questions, of course, you can email us at info@acornwealthcorp.com. Otherwise, get on it, www.acornwealthcorp.com/perfect to enroll. And again, that live class will be tomorrow, where we pick out our core positions of our next big one list of puts we're going to be getting into. So don't miss it. Again, this event only comes around under very special market conditions, and it's certainly the highest performing trades we find. So hope you'll join us tomorrow night. Again, the link down the bottom. Otherwise, we'll be talking to you all soon. Have a great day trading. Take care.